actually know what you are getting into when you buy a home in California? Not the mortgage rate, not the down payment, not the square footage. I mean the stuff that catches people completely off guard. The things that doesn't show up on Zillow and that nobody brings up until you are already in the middle of it. Because there is a version of the home buying process that sounds simple. Find a home, make an offer, move in. And then there is the version that actually happens. In this video, I'm going to give you the real version. The facts you need to know before you make any moves. I'm Lucky De Leon, real estate advisor with Keller Williams VIP Properties. Let's get into it. Fact 1. The pre-approval trap. The first thing nobody tells you, your pre-approval amount is not your budget. When a lender pre-approves you for $750,000, that doesn't mean you should spend $750,000. It means you qualify for that amount based on your income and credit. What it doesn't account for is what that payment actually feels like every month, what happens to your lifestyle, and what you have left after the mortgage is paid. Here is a number that surprises most buyers. On a $700,000 home in California with 5% down at current rates, your total monthly payment, mortgage, property taxes, insurance, and HOA if applicable, could easily land between $4,500 and $5,200 a month. That's not the mortgage alone, that's the real number. Before you look at a single home, sit down with your actual monthly budget. Write out every expense you have. Then look at what's left after your projected housing payment. That number, what's left, it's how you find your real budget, not the lender's number, yours. The question to ask your lender is not how much do I qualify for? It's what does my monthly payment look like at different purchase prices? Those are two different conversations. Fact 2, the true monthly payment. Building on that, let me tell you every component of your monthly payment, because most buyers only think about the mortgage. In California, your total monthly housing payment has up to 5 parts. 1. Principal and interest. This is the mortgage payment itself. At 6.5% to 7% on a $650,000 loan, you are looking at roughly $4,100 to $4,300 a month just for this part. 2. Property taxes. In California, property taxes run approximately 1.25% of the purchase price per year. On a $700,000 home, that's about $730 a month added to your payment. 3. Homeowners insurance. Plan for $100 to $200 a month depending on the home, location, and coverage level. 4. Private mortgage insurance, or PMI. If you put less than a 20% down on a conventional loan, you will pay PMI until you reach 20% equity. This typically adds $100 to $300 a month. 5. HOA fees. If the home is in a community with a homeowners association, which is very common across Southern California, HOA fees can run $200 to $600 a month on top of everything else. Add all 5 together and you have your real monthly number. Run this calculation on every home you are seriously considering before you fall in love with it. Your agent can help you estimate these numbers for any specific property. Fact 3. The emotional roller coaster nobody warns you about. Here is something that no mortgage calculator and no real estate website will tell you. Buying a home is one of the most emotionally intense experiences of your life, and almost nobody warns first-time buyers about this before it starts. You will find a home you love and not get it. You will make an offer and get rejected. You will feel like giving up. You will have moments where you question every decision you've made. You will feel excited one day and completely overwhelmed the next. This is not a sign that something's wrong. This is the process. The buyers I've worked with who handled it best all had one thing in common. They decided before they started that they were going to stay the course no matter how hard it got. They knew the rejection was coming and they prepared for it mentally. So I want to tell you now before you start, it is going to be hard at moments and it is going to be worth it. Fact 4. What happens when your offer gets rejected? In Southern California, especially in competitive markets, your first offer may not be accepted. Your second offer may not be accepted either. This is normal. It is not a reflection of your qualifications, your agent, or your future as homeowner. First, ask your agent for feedback from the listing agent if possible. Sometimes you find out that sellers took a slightly higher offer. Sometimes they needed a faster close, and you could have offered that. Information from a rejected offer makes your next offer stronger. Second, review your offer strategy with your agent. Were you at the right price point? Was your earnest money deposit competitive? Did you have contingencies that made the seller nervous? Every rejected offer is data. Third, don't change your standards. The buyers who get into trouble are the ones who get so frustrated by rejection that they start overextending on price or waiving protections they shouldn't waive just to win. Buying the wrong home to end the frustration is a much bigger problem than waiting a little longer for the right one. Fact 5. The inspection reality. Here is something every first-time buyer needs to hear before their first inspection report lands in their inbox. Every home will have inspection findings, every single one, even new construction, even homes that look perfect on the outside. The inspection report is not a list of reasons to walk away. It is information. Your job, with your agent's help, is to figure out which findings are serious and which ones are normal. Serious findings that warrant negotiation or walking away, structural issues, active roof leaks, major electrical problems, evidence of water intrusion or mold, foundation concerns. Normal findings that should not alarm you: older water heaters, minor plumbing drips, small cracks in drywall, dated electrical panels that aren't dangerous, cosmetic issues throughout. Read the report. Ask your agent which items are material. Get contractor estimates for anything significant. Then, make a clear-headed decision about whether to request repairs, ask for a credit, or, in serious cases, walk away. Your inspection contingency exists to protect you. Use it wisely. Fact 6. Wire fraud. The risk nobody talks about. This one I want you to take very seriously because it has cost real buyers in California tens of thousands of dollars, and in some cases, their entire down payment. Wire fraud in real estate is real and it is sophisticated. Here is how it works. Criminals monitor email chains between buyers, agents, lenders, and escrow companies. They study the transaction. And right before closing, when you are about to wire your down payment and closing costs, they send you an email that looks exactly like it came from your escrow company. Same logo, similar email address, professional language with new wiring instructions. You wire the money, it goes to a fraudulent account, it is gone, and recovering it is extremely difficult. Here is how to protect yourself. Every single time before you wire any money, call your escrow officer directly at the phone number you obtained yourself at the beginning of the transaction. Not a number from a recent email, a number you've had from the start. Confirm the wiring instructions verbally before you send anything. Never wire money based on email instructions, no matter how legitimate they look. This is one of the most important things I can tell you as a buyer in California. Please remember it. Fact 7. What changes the moment you own? The last thing nobody tells first-time buyers: what actually changes the day you own a home. Everything that breaks is now your responsibility. The water heater that fails at 11 p.m. on a Sunday, the AC that stops working in July, the roof that starts leaking during winter. There is no landlord to call. It is yours. This is not meant to scare you. Home ownership is one of the best financial and personal decisions you can make. But going in prepared means having a cash reserve after closing specifically for the unexpected. The general rule is to budget 1% of your home's value per year for maintenance and repairs. On a $700,000 home, that's $7,000 a year, or about $580 a month in savings. Start building that reserve the moment escrow closes. Don't spend everything you have getting into the home and leave nothing for what comes after. Ownership also brings something else that surprises people: a sense of stability and pride that genuinely changes how you feel about where you live. Buyers who were stressed throughout the entire process consistently tell me that the moment they walked through the door with their keys and knew it was theirs, everything felt different. That feeling is real, and it is worth everything it took to get there. So what nobody tells first-time buyers in California? Your pre-approval is not your budget. Your real monthly payment has 5 components. The emotional weight of this process is real and normal. Rejected offers are data, not defeat. Inspection reports always have findings. Read them clearly. Wire fraud is a real threat, always verify verbally. And ownership comes with responsibility and a reserve fund. None of these things should stop you from buying. They should help you go in prepared, because the buyers who know these things before they start make better decisions, handle their hard moments more calmly, and end up in the right home at the right price. If you want a complete step-by-step guide to the home buying process in Southern California, I put together a free buyer's guide that covers everything we talk about today and more. Email me or click the link in the description and I'll send it to you directly. And if you want to talk through your specific situation, whether you are 6 months away or ready to move now, reach out. My phone and email are in the description. I'm Lucky De Leon. I'm bilingual in English and Spanish. If this was helpful for you, don't forget, give it a like, subscribe to my channel, and I'll see you in the next one.